Good
morning, everyone. My name is Nancy Schwartz, and we are here with another episode of The Art of Healthy Retirement. And I'm so excited to present today an extraordinary guest who has such amazing, not only information, but years of practice in the long-term care arena. So as you know, the Art of Healthy Retirement's podcast goal is twofold. One, to support business experts who are transforming from a career to healthy retirement, and or those business experts who have retired. Format is very simple. It's 30 minutes on Zoom, and it's posted to my YouTube channel under Nancy Schwartz. And what I love about this interviewing is to focus on how our guests are living or will be living their ideal retirement with health. And no interview is the same in real time. And that's what I love about this discussion with our guest, who I've known, I think for 30 years. So our intent also is to disrupt the way you're thinking about healthy retirement. And our podcast is educational in content and offers inspiration to others by showcasing information that is incredibly valuable to our guests. So this morning, and welcome, Armen Abrahamian has an incredible background, extremely well-versed in long-term care, and this is becoming a product that is so important, and we're going to get into the details later. He has led the long-term care insurance company, and he's a national leader in this field of long-term care. And he's often called by the legal and accounting and financial professionals to assist his clients and their clients who require long-term care planning. Believe me, I've worked with him. He has an encyclopedic knowledge base. It's really kind of staggering. There's so few people that have the accumulation and the historical as well as the forward-pacing breadth and span. He's also educates CPAs and through that work has been working directly with corporations and associations and government bodies, again, to offer this expertise in long-term care solutions for not only the individual, which we talked about, but the company's employees and members. And Armen, the reason he's so amazing is because of his engineering background. His mathematical skill set is pretty extraordinary, holding a BS in electrical engineering from Lafayette College. And I'm sure he has a treasure trove of certificates, both in long-term care and advising seniors. So Armen, welcome. I'm so delighted that we can have a conversation today all around this topic of long-term care.
Thank you so much, Nancy. Wonderful introduction. I appreciated hearing all the accolades. But anyway,
no, you so deserve you so deserve it. You so deserve it. So what I always like to start a conversation with is really let's figure out the marketplace and why is this subject so important, particularly to our audience and those who are listening. And some of the reasons that I've thought about specifically for this podcast is in 2024, 11,000 Americans per day are expected to celebrate their 65th birthday by December. And so this is really a focus on the demographics are changing. The other thing that I thought was very interesting, in 2023, journalists started to notice the rise of living alone. And in 2023, they calculated about 30% of the households are single. And also, the other thing that I'm seeing in the marketplace right now is that those who potentially have had a partner or have gone through a divorce, those individuals aren't remarrying. So it's very interesting. It's kind of quirky. But I feel that within urban areas, so Armen and I are very close to the New York City area. I feel that 30% is very low. I think it's a lot higher. And the other thing that's compounding these two movements in looking at how we will prepare for our longevity, really, is that there's a drop in birth rates. So in terms of these very large families that provide infrastructure for care, now not only are parents waiting later to have children, but they're much more succinct in one or two children. So I'm not sure, Armen, if you're seeing that, or perhaps you're seeing other things in the marketplace, but this demographic shift is highly impactful, I believe, in long-term care. So you're the expert, that's why we have you. So what are your thoughts there?
Absolutely. Everything you stated, it really is right on. I'm seeing it, and it's just such a smattering all across the board of the difficulties that a long-term illness inflicts upon family. Second marriages, children coming from different marriages and backgrounds, even within the nuclear family, where son and daughter would see it differently in terms of how to care for mom or how to care for dad, which has frankly given birth to an entire industry of geriatric care coordinators, primarily women who would hire their services out to the family to help play psychologist, counselor, coach, walk them through this whole process. Because let's face it, none of us have gone to school and ever learned or been trained on dealing with long-term family illness, mom or dad being ill. And it's just such an emotional, physical, costly, certainly very, very costly. And it impacts primarily women are the primary caregivers.
Exactly.
Men don't do such a great job of caregiving.
Yeah, men, we've got to step up, men.
Yeah, we definitely need to. My dad, by the way, did a wonderful job for our mom. So he really modeled for both my brother and I.
Lovely.
That care for years. But very often also it impacts women primarily in the workplace.
Yes.
The cost to employers and on and on and on. So it just has this trickle down effect that is just really, really impacts everybody. Statistically, and I love the stats that you shared, statistically, again, we're living longer.
Right.
We're, like you said, 11,000 every day, turning 65.
Yeah.
The Department of Health and Human Services, and depending on whose statistics you read,
right,
would state that at least 1 in 2 65-year-olds, it's a flip of a coin, are going to have a long-term illness before passing away.
Yeah, and so let me just dovetail on that. With the stats that I know is that by 65, many of those people already present with 2 chronic diseases. That's staggering to me. So, and with that requires the level of care that you're talking about, unfortunately.
Absolutely. And the healthcare industry. So there's I'll break it down into the acute care, hospitalization, rehab, going and seeing your primary care physician or specialist. We've grown up with health insurance, the Anthem Blue Crosses, the Cignas, here in Connecticut, Connecticut. Right. And of course, Medicare, which acts as primary care. So there's acute care where you're expected to potentially get better, hopefully get better or improve. And then there's long-term care, which I'm kind of drawing a dividing line here, where you typically need assistance with 2 or more activities of daily living, the things that you and I do when we wake up, we bathe, we dress, we toilet, we,
Right.
we eat, these sorts of things. When you're unable to perform two of them, and typically bathing and dressing are
Yes.
to generally go, and your physician states, your licensed healthcare practitioner states that you need assistance for an expected period of 90 days. That's what makes it, quote unquote, a long-term illness. This is defined by HIPAA, so it's
Right.
standardized across the board.
Mhm.
Then you have a long-term illness. Or another way of qualifying for a long-term illness is would be cognitive impairment,
Yeah.
dementia, Alzheimer's. And by the way, statistically, Alzheimer's, we're approaching 7 million Americans with Alzheimer's. It's
Currently,
staggering.
7 million with who have Alzheimer's now, and
Correct.
I'm sure that those numbers are escalating.
Yeah, they're going way up.
It's a straight up line, and
Yeah.
it's really, really scary. Yeah.
So how do we pay for this? I mean, this is
Yes.
where, providing the care and all of that is, and, that sort of thing. So how do you pay for it? Well, there are only three ways to pay for a long-term illness, excuse me. The first way is you or I pay out of our pocketbook, because Medicare and health insurance, they were never designed to pay for a long-term illness.
Yeah.
Medicare will pay at the front end. I'll spare the details at this point, but typically they're going to pay for some rehab at the front end after a hospitalization. They will provide for some home care, but frankly, they do not pay health insurance. That acute care
Mhm.
insurance was never designed to pay for long-term
Right.
care. So where does that leave us? It leaves us where we have to pay out of pocket until we essentially impoverish ourselves down to a level. Single person has certain levels that they would reach, a married couple, different levels. But once
Right.
you hit these literally very, very low levels of
Mhm.
assets and household income, then you would go on Medicaid, Title 19, it's welfare. You become a
Right.
ward of the state, essentially. And so it's very costly. Here in Connecticut, a nursing home, the place no one ever wants to end up in, on average, a semi-private bed in Connecticut is $500 a day. That's $15,000 a month. And
Right.
as you get closer to New York City, that figure really goes up.
Yes. Yes.
I have
Mhm.
clients in nursing homes down in the Fairfield County area paying $22,000 a month.
Yeah.
So
And
that's
I know that those numbers are right because, yeah, I have that as well. And they've been significantly higher, just areas of the country. So that's another
right.
thing, because I know you work in California and many other places that um, whereby the care perhaps superior, but therefore the cost, right?
Correct.
And then I want to go back to that statistic that you were talking about, that when you're running down the family's cash, I'm sorry, I don't understand how they calculate that number, because that leaves that either partner or the family, there is literally nothing left. I mean, you can't actively live without all these subsidiary pensions, or I don't know what you call it, the monthly stipends that come into this. Those numbers are really skinny.
Yeah, they really, really are. I can certainly state some of them quickly and give you a high level view of those. Let me just back into that for one moment, Nancy.
Yeah.
Say this: where we get our care is
Mhm.
typically either in a facility, a nursing home,
Right.
assisted living facility, or at home.
Mhm.
Most people prefer to remain at home. And frankly, if you look at the statistics, for every 10 people receiving care now in the nation, about 7 of them are receiving care at home. So
Yeah.
getting care at home is preferable. It's generally less expensive, but keep in mind, you're bringing a stranger into your home, and everybody's concerned about, boy, what if I, things get stolen, things are lost. What if I don't like the person coming in? And on and on and on. So it introduces home care a whole set of other subsets of difficulties to navigate. But so where we get our care, home or in a facility, it's very, very high costing.
Yes.
Okay. And again, our health insurance plans do not pay. So how we do pay, we come back to, if you have assets, say we're a married couple,
Mhm.
home or a condominium, and we've got combined, let me just say $500,000 in
Right.
assets,
Mhm.
okay, as a couple. What happens is, if all of a sudden, let's say the husband in this case needs long-term care services, whether at home or in a facility, insurance is not paying, he's going to have to pay out of pocket. And let's use an average number of $10,000 a month.
Yeah, for ease.
Right. 10,000 a month. He is paying for that care, whether at home or in a facility, at that rate, out of pocket. And as a married couple, let's say his wife goes and sits with her financial advisor or elder law attorney, and that's the type of attorney that one would definitely seek out in this situation. The elder law attorney would tell her that they must spend down that $500,000 nest egg down to approximately, I won't give you the exact number,
Yeah.
$150,000. That's the high level number that she can keep. 150,000, which means 350,000 is vulnerable. It needs to be spent down on his care. She would be able to remain at home. So the state of Connecticut is not interested in kicking her out of her home. She can remain at home, keep $150,000. The other $350,000 is gone for his care. And at that point in time, once the asset level is reached that $150,000, he would be eligible for Medicaid, not to be Medicare, but Medicaid, Title 19. And now the state kicks in. It's Medicaid is a state and federal program, would kick in and pay for his care. So she is essentially impoverished at that point. In terms of income, because that question comes up often, well, what kind of income can she keep?
Exactly.
She can keep her own income. The state is not interested in taking her income, but his income is typically, they're all different scenarios, but typically going to go pay for his care. Let's say he's got a Social Security check of $3,000 a month. That $3,000 goes to pay for his care, and Medicaid steps in to make up the difference.
Yeah.
So that's a typical scenario. I'll stop at that. And if you had a question.
Yeah. So what I think Armen and I are trying to paint here is an education around the reality of what happens and how state by state it's very different. Long-term care can be incredibly complicated, but we're trying to keep this very much at the high level for those people to just give an idea of certain scenarios. So when I was in my 40s, I realized, and I'm going to shift gears here a little bit, and I realized, wow, I'm an only child. I have nobody. I'm one of those statistics, right? I'm in the single situation. And while I'm married, there's still nobody around to really help me, right? So I need to help myself. So literally 1,000 years ago, this was a new product. And I thought, man, I better invest in this. And then I thought, okay, well, this would be great for my parents at the time in their mid 80s. And I was denied. I'm one of the denial categories that Armen mentioned, even though at the time, both my parents were in very, very good health. And in fact, my agent even said to me, Nancy, you have no idea. These insurance companies turn you down right and left. And she regaled a story about a very, very fit 40-year-old who played competitive, like professional tennis. And because she had this tennis elbow, the insurance company said, no, no, no.
Crazy.
And what's interesting, I was just on another networking group, and I just heard about an individual applying for, I would say the age was maybe, I don't know, career level person. And because he smoked recreational marijuana, that was a no. And so they were searching for other carriers for him. So insurance companies are known for turning down people. So that's one of my things. And you're not excluded from that, no matter what your status. So when in the marketplace, Armen, is this a product that you think people should start thinking about? What are the triggers in one's life whereby, I need to take care of myself. How can I do this? And I know in this area, I mean, for a while there was quite a push to go into these assisted living. You know, you were talking about acute and home care and all these different types of quality products.
Right.
But really here, and for so long, the home care piece. And believe me, when I tell you, because I've done a lot of this for others, those price points, week over week checks that you're writing are staggeringly large over time. And rightly so. I want to pay it because that person that has worked for that, but it's just amazing how expensive it is for care. So I think my first question to you is, you know, how do we know we're a career person? You know, we're doing really well. I don't even want to think about that, but boy, oh boy, we're here to tell you, this is why I'm doing this podcast. You got to start thinking about this earlier rather than later. But Armen, you're the expert, so you tell us what's the story about that.
Typically, and it's so important to address this, typically what I would recommend and what I see, when a person, I'd say mid-50s, realistically, is a real good time. I mean, typically at that point, a number of things have happened. You know, children, if you have children, adult children, they're at an age where they're either, you know, in college or leaving the home, the nest egg. And so let's say we have a couple, husband and wife, you know, they're typically working, still earning income. But by the time you get to your mid-50s, you're also thinking of, gee, retirement is a lot closer than I thought originally, you know, when you were 30 years old, and it was like, boy, that's way off in the future.
Right. Can't even imagine it.
Can't imagine it. You know, all of a sudden you're starting to see that. A. B, the other thing is, you know what, you're starting to feel some bumps and bruises in life, you know, physically, back issue. There could be, you know, a number of conditions that have you know, come up on in the healthcare map. So you start considering it at that time. Now, I would say it's also a good time because, like you correctly stated, the insurance companies are they're sticklers. And
they're picky.
They're picky. And a person who waits, let's say, until they're in their mid-60s or late 60s, by then, and I see this all too often, there are a number of conditions in the medical record that could preclude them from being able to purchase the insurance, or if they still can get the insurance, it might be rated at a higher premium. So getting into a policy when you're in good health, premiums are based on your age when you apply. So it's going to be less expensive the earlier on that you are, and you've got a much better probability of being able to secure that coverage. And typically when you purchase this insurance, it's really a once and done sort of thing. You're not, you know, unlike maybe auto or homeowners where you might go out and shop it every years, that doesn't really exist in the long-term care space. So to answer your question, I'd say that is, you want to start earlier. Now, if you know you've got mom or dad had dementia, or there are some certain things in your genes, I'll say,
Right.
family history, you might want to start looking at it sooner rather than later.
Yeah. Our insurance, I'm curious, are insurance companies looking at all of the blood work that we're now doing, like with Function Health and many of these other places where they're doing gene profiling? I heard about a case where, was it 23andMe? Might have been that I think it was over the radio, that this person went to apply for insurance and somehow they got a hold of his blood work, and they denied.
Yeah.
For when you mentioned that word gene, I was like,
Right.
wow. So I'm just putting that on the table too, to just advise, and Armen, you're
That's
the
right.
expert, but how incredibly scrutinous the insurance companies now have availability for a lot of the databases that they didn't have before. And so they're able to rule in and rule out.
Right, right. I would say this, Nancy. I'd say that first up to bat, I'll say,
Yeah.
is the health insurance and acute care side.
Mhm.
That's where we're starting to see more of those denials and scrutiny. It will filter down to the long-term care
Yeah.
space. Right now, in the long-term care space, companies are asking, do you have any immediate family, mom, dad, siblings, had dementia, Alzheimer's, Huntington's chorea, different diseases? So they're asking those questions, but without question, to your point, the genetic testing is going to start to impact it. But down the road, we haven't really seen that yet, industry-wide. I'd like to add, if I may,
Yeah.
the long-term care insurance industry, really the insurance products
Mhm.
that cover you at home or in a facility, started, believe it or not, in the mid-60s. They were poorly written policies back then. And they were primarily for nursing homes. They didn't even cover home care, and then home care started coming into its own as that became more.
Right. Right. Mhm.
Traditionally, the industry has offered what are called health-based long-term care policies, where you would purchase I'll call it a bucket of money, a lifetime benefit. It might be $300,000, $500,000 or more, or unlimited
Mhm.
pool of money that you could draw from in the event that you needed care at home or in a facility. You would draw from that to pay for your care, wherever you're getting your care. And with these types of policies, these health-based policies, it really is a use it or lose it type of scenario, similar to
Yes.
our homeowners, auto insurance, etc. If you pass away, my dad passed away, had a policy, never needed it. The premiums he paid in were essentially gone. They were lost.
Mhm.
Those types of plans, by the way, have had many companies have had rate increases, premium rate increases over the years. Frankly, the actuaries were using data that was inaccurate. They were way off base for a number of reasons. And there have been rate increases that people have had to deal with.
Yeah, substantial. And we're talking substantial rate increases.
Doubling premium, tripling premium.
Yeah, yeah. Just because of the miscalculation of the actuarials in terms of longevity, in terms of need of care. I mean, there was a whole algorithm that the insurance companies were realizing, holy cow, wait a second, we're not making money.
Right.
So yes, exactly. So and it's significant in terms of thinking about, can you sustain that rate of loss on yourself, basically, in terms of, can you pay that premium just in case, and then can you pay that so that if you need, and are you okay with, you're so healthy forever and a day that it can evaporate and your family, it's not a pass forward into your inheritance. But for certain people, it's the right choice.
Yeah.
And for me, it certainly is. And for many other people, and for some people, it's not the right choice. So it's really what I think Armen is trying to say, and I'm trying to say, is that it's really important to work with someone who has, as you can see, Armen's got an encyclopedic knowledge. He knows policies, different types of policies, backwards and forwards. He can quote paragraphs. He's a scary dude, but that's a good thing because of all his expertise within this subject matter. You really need to work with an expert in long-term care, specific to where you reside, and know the ins and outs, because this is unfortunately very complicated for a simple need of, I need care, but okay, but how do we go get that for you? How do we service that human? So Armen, anything else that you'd like to say? And thank you for being so informative and for being here. And then I would love you to be able to give us contact information. Where can we find you? How do we tune up your incredible expertise?
Sure. No, thank you, Nancy. Appreciate that. And by the way, I'll just add that a lot of folks are still in the marketplace looking for this insurance, but the majority of people either that I speak to either don't have any insurance and find themselves, my phone will ring and it's, gee whiz, mom or dad has now got an illness. What do we do?
Right.
And don't have protection. So I'm able to help consult and assist folks there. And also, frankly, a lot of agents have left this business, unfortunately, because of those rate increases we talked about. And my phone will ring where folks have policies. They purchased them elsewhere from another agent 20 years ago, let's say, but now they're trying to navigate another rate increase like we've been talking about, or how do I go on claim? Help assist me. So there's a lot of need out there when it comes to this subject matter. I would also say it's really important that people, if you have not discussed it yet amongst your family, have the conversation. It's so important. It's on people's minds, but it's one of those subjects and topics that people don't want to talk about. It's difficult to talk about this, but have the conversation.
Have that communication with your family. I think what Armen is saying is that whether it's a yes or a no, to have that conversation. And I say this over and over and over again. And from my experience, I was so fortunate because my dad put everything on the table. I had no idea when this was happening that was so important to be transparent. But what I later learned in life with a lot of power of attorney work that I was so honored to be able to do for other people, that being in the dark is really troublesome. Troublesome for the patient, the client, if you will, troublesome for the family. I don't know. How can I make this decision? How can I support this person if I don't know? You're not working with a full deck of cards, is what I'm trying to say. And so I cannot emphasize that enough, is to have that conversation. So Armen, thank you for raising that. It's so important. And I know it's incredibly difficult. And I know people don't want to talk about it. And then they get mad and angry. My mother was like that. She didn't want to talk about it. It was very uncomfortable for the family. Very few times I'd ever see her upset was when we were trying to elicit some kind of, what would you like? Those conversations were incredibly challenging. But I encourage the families and or the person who is the client to have those conversations.
Absolutely. Yeah, very, very important. So, no, Nancy, this has been terrific. I mean, if folks wanted to reach me or just have a conversation.
Yes.
I can, if you'd like, I can provide you our office phone number.
Yes, please.
North Haven. Sure. We're in North Haven here. 203-234-8566 is our office phone number, 203-234-8566. And email Email's always great.
Yes.
Is my first name Armen, which is spelled Armen at ltcstrategies.com. Armen at LTC, like long-term care strategies, plural.com. So this
Well,
it's been terrific, Nancy. Thank you.
No, thank you so much for carving out time for this podcast. And I'm delighted to finally have you on this podcast. I've been envisioning it for a year since we've started. So thank you for making this happen. And please take advantage of Armen's incredible knowledge base because it's tricky. It's tricky in terms of the coverage, and understanding the process, I think, is really such a tool that you provide, and counseling for whichever side, the family or the client specifically. So again, thank you so much, and so appreciate your time. So please stay in touch, and all the best.
Wonderful.